Hello, hello, hello. Happy Tuesday, everyone. Good morning, Patrick. Good morning, Sterling. Good morning, McRangers. Good morning, Anissa. Good morning to people in the background. Where's everybody in the chat? Where is everybody today? Well, it's Taco Tuesday. Come on. All right. Guess there's not a lot going on today. Well, there's not a lot in the equities. Doing a slow grind higher, which, that when it gets to that with cycles at the top, it puts me a little on edge, but got to wait for a breakdown. Good morning, Bull Strike Cheetah. So what do we have? We have, why didn't that update? We had Redbook. Oh, there it is. Redbook came out 4.9, dropped from prior. We got the JOLTS job openings and quits at 10. And we've been getting a little movement off that recently. So keep an eye on that 10 a.m. Eastern. Also, factory orders out then. But overall, a very quiet day. We have Goolsby, Cook, Logan speaking today. Overall, though, quiet day unless something's out of the administration. You never know. You never know what's around the corner with the Trump administration. Good morning, Royal Palms. Good morning, Harold. So that's where we sit. Not a lot of great setups right now. It's like we're at a transition point. S&P 500, Broadcom, NVIDIA up. Google down. Meta hit the second target on the double. Tesla a little bounce back today, but very, very quiet. Look at these groups. Yet when utilities is leading, I mean, we got a pullback in the yields. Utilities rallying, but overall, you got basic materials pulling back with gold and silver, which had a big day yesterday. You got a lot of things not doing much. Hello, hello, Christoph. Good morning, Heinrich. Good morning, Jacob. The whole crew is funneling in. Thank you, everybody, for tuning in. I really appreciate it. I really do appreciate it. All right. Fed Watch still is cut in September. Fear and greed, back to neutral mode. I don't know how market momentum's in. This is confusing me. I'm still watching this because when it's a pretty good indicator of how it swings back and forth and the extremes. But how is this market momentum in extreme fear? I mean, if we look at what the market's been doing, that does not look like extreme fear. Stock price strength and breadth, extreme greed. Put call options neutral. Volatility is neutral. Safe haven, extreme greed. Junk bond, extreme greed. So I don't know how extreme fear from this market momentum. Don't get it, but I guess it's not my model. 36.50 on that good old Schiller PE. Dollar General, big gap up on a a strong beat. After the close, we got CrowdStrike, Hewlett Packard Enterprise. Tomorrow morning, we get Dollar Tree. So, but again, remember, not a lot till Thursday afternoon. So what are we doing today? All right, we broke above that key level. Let me get this done. There we go. Above that key level I was watching yesterday. If we go back down here to lower time frame, we finally broke above it. Where is it? What do I want? What am I doing here? Rejected, then finally broke above it and retested right there. So now I have the little key area. We have this breakdown. I'm still watching this. I'll lower this a bit because that's been reinforced and confirmed about 59.18. But then really it has to break below about 59.10 to really start breaking down. So on any pullback, I'm watching 59.18 and then break down 59.10 to possibly retest the 58.66. Good morning, PMG. So, all right, but here's the key level just to watch off the open. Key level I'm keeping an eye on is right here because it's into a clear path move. The clear path move from last Thursday. So 59.49, 59.50 area is key, and then it's into a clear path move. And let's take a look at those harmonics. The good old harmonics, the shorter term ones. And look at that. 62.5 right at that minor significant level. So that 59.50 area is critical. You start closing above there into a clear path move. I'm watching my targets 59.88, 59.89, which is the little breakdown zone. That's exactly on the key grind higher. If we start breaking back below that 59.18, we'll really be focused on a possible return of 58.72 to 58.66. And that doesn't have to happen today. So that's the setups I'm looking at today. The NASDAQ, by the way, I want to just check something here. Got to check it before you wreck it. That is a complete valid potential double top. Early warning sign to break below 21,433. Confirmed on a close below 29,399.25. And then you get the bigger pullback to just above my major support level. We're just going to bump that up to right there. 21,208. If that does dip down, the next level I'd be really watching is back down to about 21,108. But if that double were to trigger, that's it. Otherwise, if I could click in the right spot, my clicky finger is broken. There we go. Look at that. Look at this again. You got this little spike high. You got the clear path move. You got this just right around that spike high and the 62.5. So 21,561, we start breaking above there into a clear path move. My target will be 21,760 with at least a stop raise at 21,662. Coco, I'm selling rips instead of buying dips. Okay. I'm trading both in a range until we get the major breakdown. Now, we start getting to the prior areas up here, I'll be looking for more significant topping patterns. We break down, I'll really get a little more aggressive as a short side if we start breaking down 20,918. Thank you for tuning in, by the way, Coco. Still have a potential double top in the Dow. Lots of this is just like literally grinding higher. Same difference here, 42,380 into the clear path move. You can put up the harmonics if you want on the Dow. There's actually a lot of key support, so this is not one I'd be looking for first to the short side because of all these key support levels. Russell, again, that's where you learn. One of the things I'd recommend too is, you analyze the big four, meaning the S&P, NASDAQ, Dow, and Russell, and then, figure out where the best setups are for either the long and the short side and shift to those. If the best setups on the short side are on the NASDAQ and that triggers it, then that's the one I'm going to. I'm not going to try to force something in the Russell or the Dow. All right. Russell, again, key support was this 20,041. Really boring in the Russell right now. Key level, though, I'm watching in here. This one I will do the harmonics too. I'm watching this on a continued rally. This is a 2086, but 2097 has to be key in order for it to get a rally on. And again, look at that. Look at where that prior peak was, right at 62.5. Love me some good levels lining up. Again, it doesn't change the probabilities, but it's really makes it a lot easier from my perspective to structure a trade. Little support going into the open about this 2074. So, the good old VIXY, not much going there. Again, on the short side, we got to start climbing and get some momentum above 20. The DAX, not much to talk about here. Still holding the rotation zone. Not invalidating the double yet. So not much to talk about. Either still the breakdown play, or if this rotates up again, then the double will be off the table. I should say potential double. The yields rejected from this 445 right now. Again, that's my key little breakout area I'm watching. Breakdown is below the 50. Otherwise, it's in no man's land. We still got yield cycles going down on the weekly and trying to turn up on the daily, but I don't have any great trades in the yields. 30-year keep getting rejected from just below 5%, about 4.98. But again, no great setups there. It's when you learn to not force something. We don't have any short-term great setups in the dollar just yet. But on the bigger term, I'm watching this potential double. Just like in the euro, we entered potential double top territory. May never trigger, but that's the bigger pattern I'll be watching over the next few weeks. In case these do trigger, it could be a drastic shift. Again, don't force things if you don't have setups. There's not always a great setup. We're back at the upper end of consolidation in crude. Again, I need to break above about 64.20 before I really get interested to the long side, or break down, unless there's a little mini short pattern, or unless we start getting above 64.20 and basing above there, then I'll start focusing on the long. But the real breakdown play has to be getting back below about 60.50 and sustain something below there. But it looks like these markets are just on pause. Gold hitting the 75% harmonic, little pullback here, but I'm still going to be, my targets in the short term is 34.61. So looking on a short term this is short-term trading gold, looking for any pullbacks and then rotations back up. Silver, big breakout yesterday. So now we have our confirmed major support level. Not even looking for it to pull back that far. It already tested a minor support level right here. You can see that this morning. By the way, on a break above these recent highs of about 35.50, the targets are 36.50 and about 37.50 based off the harmonics. Copper, still getting rejected. Paying very close attention to this 488 level, because you can see how many times it's been rejected now. 1, 2, 3, 4. Yesterday was a strong bar and got rejected and closed below it. If we start either on an intraday momentum above 488, 489, or break above that and confirm and rotate back up, I'm watching strongly then for a possible move to 520 again, with at least a stop raise about 503. So some of the metals have the best setups right now in the short term to me. Coco says next year, we're already on next year? Next year will be in the history books? We're only halfway through 2025. So come on, Coco, we're not even there. But all right, somebody jot that down in the Coco notebook. Next year, maybe. Not going to disagree with you, Coco. Yields starting to bounce on the 30-year a bit, but nothing much to talk about there. Not much to talk about in the yen just yet. We already looked at the euros, the Spideys. This has not invalidated the potential double yet. Again, minor gap down today, so I'd be looking for the gap fill to 592.71. And you have very significant resistance at 593. Above 595, I'd be looking for the recent highs back around May 19th. Okay, you have a lot of support base right around this 586 to 586.25. The Qs, little gap up today. The key we still have, it's not a gap fill, but a key reversal open that I'm keeping an eye on as a target should we rally from last Thursday. A 526.33 is a very key price on any run up. Very key support right down about 515.70. All right, the good old Bitcoin. I'm now watching this. We've held the second target on the double, but we're setting up a potential little mini head and shoulders. So that's what I'm keeping an eye on in the good old Bitcoin. So we'll have to see if that triggers. And then if that starts breaking down, I'll actually be watching for some potential rollover plays, especially in the NASDAQ. Tesla could, if we do bounce up and roll over again, could be setting up a sloppy head and shoulders also. Be watching that. We got Broadcom earnings, remember, on Thursday after the close. Still retesting. Now we have a multi-top pattern. So if that does break out, targets again, 266.10, 280.33. And those are, you don't have to use those exact numbers. Those are target areas. What do we got, Sterling? Mike, XYZ is gapping up above the weekly 21 EMA into the clear path move range after the Evercore upgrade this morning. The good old block. The good old block. So we'll have to see. I mean, that triggered a double. Triggered the double back on the 27th of May. So the targets again, 66.50, 69.87. I didn't put on the, I want to see what the retracement harmonics are on this. And to get in the clear path move, it's got to get above about this, just use about 66. So it's really around that first target takes it into the clear path move. So it's a little shy of that. This is not the clear path move yet. It's got to get above this area. So just use about 66, 66.50. All right. But there you go. You still have these double targets. So right there. And the key area, by the way, for me personally, now I was asked, Jake, who's not here, maybe he'll watch it on, he sent me an email wondering about can you roll patterns and other patterns? So this would be something, here's a good example. Okay, you still got gaps up. Here's the key area where I would really be focusing. This would be a stop raise for me. I'd actually bump up the second target a little higher into this 50% where the 200 is. However, we start closing above there. We have gaps left behind. Okay, so I'd then start ratcheting up a stop. Use 78.64 as the next target. We close above there, it could continue to run. Not saying that will happen here, but that's where I will roll patterns into other patterns. Okay, but that's kind of thing how I look at this chart and structure it. I would not ignore the 66.50 area, by the way. And you see why I'd actually bump up the second target to just a little higher to give it a little more room, and then I take action at that. And that would be taking something off. But then if we continue to run, if we continue to run, especially close above the 62.5 and pull back, eventually I'd be possibly looking to add it back. So that's where we sit. That's where we sit. That's a really good example. Let's see. Meta, there you go. Oops. Gotta fix my harmonics. Meta hitting the second target. So again, got close, pulled back in the rotation zone. Also, this was a %B buy, little gap up %B buy. And then rotating back up. Again, final target 693. Now here's another example. Let me just do this for a second. Here's another example. Since we are above the 62.5, this is where the final target on the double 693.88. But if this keeps running, we have a gap left behind in 87.5 rule. This is where I leave something on even after the third target. Okay, and trail. Not just say, hey, because again, if it rolls over, fine. But I was playing the probabilities of another pattern. This is another key example of where I just continue to let something run. Those are the ones I focus on in here. Harmonics, double tops, and double bottoms. Personally, then I use a lot of rotation trades and a lot of percent B buys. And then I use some other things I don't go over here because I try not to. Again, you don't need 20 setups to be successful. I found if you can keep your number of setups to 5 or under and then have really good reward risk management, that's all you need. You don't need 50 setups. You'll actually start missing stuff. So, I mean, my bread and butter, double tops, double bottoms, harmonics with, shifting and probabilities. But then, all right, let's say the probability shift. What do I watch for? I watch for pullbacks in the rotation zones. I watch for pullbacks with percent B buys in the direction of the trend. Right there. If you can master some stuff like that, then the other things I'll watch for divergence setups, but then you still need a trade trigger. Again, if anybody wants to email me, use pathtradingpartners@gmail.com for the time being. pathtradingpartners@gmail.com. Other than that, I'm just going to put on my gap fill. Oops. My gap fill for Meta. Hey, Coco, I'm agree. Trading is a game of patience. You wait for your setups. You wait for them to trigger. You make sure just because something triggers, if you can't get reward to risk, it might not be your trade. If you get it to trigger and then you get proper reward to risk, great. Then you execute. Remember, see, there's not a lot of great setups in the. I'm talking bigger term. Minor setups, yeah, I'm looking for this. I went over it in the S&P today. A minor setup, it might not trigger. Other than that, it's sit on the friggin' hands. Sit on the friggin' hands. I'm going to be sitting on the friggin' hands and watching some precious metal or industrial and precious metals, and keeping an eye on mainly the NASDAQ and the S&P on short-term stuff today. But from a bigger perspective, look, you still have a potential double top, but we're nowhere near triggering it. Nowhere near triggering it yet. You're welcome, Anissa. Taking every trade that comes, in a system is my current issue and I'm working through. Again, I have not been able to take every trade because, it depends on what you're putting on, your position size. Again, let's say I'm trading 20 potential markets plus stocks and I have 30 signals go off. Well, guess what? I might not have the account based off my position sizing to do all 30 signals. So I'm going to choose the ones that have especially ones that are with the trend and the highest probability setups. So, again, that's a good thing to be working through, though, Jacob. Got to come up with a way because not everybody can take every setup there is, nor can you effectively manage it. I've had days where I've had, like with all the markets I'm following, like when a lot of stuff sets up, I might have, hey, we're at major inflection points in the market. I might have, my alerts might say, hey, there's like 48 trades going off this morning. There's no way I can manage 48 trades unless you're doing it all automated. All right. So that's a pretty good way to start the day, start a Tuesday. Just peeking into the NASDAQ again. Right up to this very key level. So I'm going to be paying attention, might pull back a little, but if we do break through that 21,560 area. All right. Let's see. Trading is 10% buying, 10% selling, and 90% waiting. How about, let's use the 80-20 rule. 20% times taking trades, 80% of the time managing and waiting for setups. I just try to master one setup. Can't imagine to take a hit on different setups now at the beginning. Doubles together with RSI divergence, my setup for now. Great. You know that. That's the one. And master. I didn't master every setup at once. I just traded the ES until the bugs are worked out. Fantastic. At least you know what you're working on. Like Bull Stripe's working on doubles with divergence. Jacob's working on just trading the ES with his setups. Fantastic. All right, with that, I shall talk to everyone later. Remember, 10 a.m., so 30 minutes after the cash opened, we have some numbers coming out. Other than that, that could set the tone for the rest of the day. Cocoa, yeah, 80% cocoa. All right. With that, I shall talk to everyone later. Hope you all have a wonderful trading day. Thank you for tuning in. Bye for now.